Hey traders, Nick Shaheen here. Wanted to recap today's action in pictures, actually in motion pictures. This is the SPY action from before the open through the CPI report and into the close. I will try to give you as much commentary as I can, which is actually how I would look at the action while it was happening. Let me narrate it when it's static because I don't think I can keep up with it as it's rolling. All right, so we came into the pre-open in the S&P up. I forget what it was, 20 points or whatever. It was up. And going into the report, I wasn't like, okay, they decided that they wanted to rally. I was saying, okay, we've got a good starting point. But the fact that they closed at the high yesterday, or strong yesterday, and they were up in the morning, meaning that even if they were scared, if they were really scared from the report, they wouldn't do this. They would meander. Like when we had the Yellen events in the past, they would meander into the event. They may rally before it, a lot longer before it, but then when they come to the event, they meander. In this case, they wanted up, so they showed their hand, and then the report came out. It was a disappointment. Why? Because it was a little hotter than normal, or than expected, I should say. So, boom, the sellers came in force. We went long. We said this is a bad reaction. It doesn't make sense. So 3.25 versus 3% on the 10-year is not going to cause Apple to lose more than, four iPhone sales. Jokingly, of course. Well, people are going to spend. They're employed. They're going to continue spending. All right, so the dip came fast, and then the bounce started to come in, and then the pundits in the news saying, well, maybe you should be cautious, and then a few of them actually stuck to their guns. And you get to hear first level of interest. That was yesterday's neckline of sorts. Burst right through it. It's not a coincidence that they did it again because they did it here. Then they get to hear the crime scene, so to speak. That's where the ledge came. They meandered a little bit, but not much. I expect a little bigger fight here. Boom. They got to the highs. They meandered a little bit here. These are pivot points. So whoever was buying and selling here, they were going to buy and sell again. And the point is it going to be forward resistance or not? Well, it wasn't. They thought about it a little bit. What is this, a J-hook, whatever? So burst right through it and closed towards the high. That's an emphatic move because all throughout this time, the 10-year was climbing. That's the boogeyman. That is what caused the correction 3 weeks ago, 3 Fridays ago, I should say, when the report came out and wage inflation was hot. So immediately we jumped into the conclusion, oh my gosh, the Fed's going to raise. The media had you believe that 3% the end of the world. Well, guess what? It came pretty darn close today all throughout this. So is it the end of the world? I think we as traders came to term, the markets came to term with, hey, 3% is happening. We knew it was coming. It was part of the thesis. What are you doing selling? That's what we were thinking. So let's run it. I'm going to hit a replay button and start it, say, from here. And let's see what happens. And we'll hit play. This is the overnight action. Then we come to the pre-open, up. The report comes, boom, we crash. They start climbing. You'll see they'll stall a little bit here because of this area. Then they burst right through it like they did yesterday. Then they'll spend some time here, but not as much as I thought they would. They used it immediately as support to attack this line, where they spent the most time consolidating before they ran up higher. And this is all, in 5-minute increment, I think. Yeah, I put 5 minutes. So every candle is 5 minutes. These are emphatic move. Every time, the opposite of this was the VIX was falling out of bed. I don't watch the VIX. I watch the VIX futures, and they were setting lower highs. Every bounce is being sold, which is the opposite of what was happening before. All right, Nick signing out. If you have any questions, let me know. You can email me at sellspreads@gmail.com. In case you missed it, sellspreads@gmail.com. That's the easiest way to reach me, or you can tweet me.